Welcome back to the Crypto Trends Podcast, where we cover all things cryptocurrency, blockchain, Web 3.0, and AI. I'm Robert Croak, and I'm joined by my co-host, Armando Pantoja. Both of us and our amazing team are excited to bring you the best information, guidance, and strategies each and every Wednesday. So follow along and always remember to take notes and take action. So let's get into talking point number one. I think it's important that we cover the Bitcoin halving again, what these breakout patterns look like, and what to expect. Because I think even though we've covered it several times, people forget that after the halving, there is not just an immediate bull run. And it takes time from the halving to see the bull run come to fruition. So I want to talk about it a little bit of what is a Bitcoin halving. We'll just touch on it briefly. And what are people to expect in the coming weeks and months now that we're a few months after the halving? The Bitcoin halving happens approximately every 4 years, reducing the block reward given to miners by half. And this reduces the rate in which Bitcoin is created, effectively cutting the new supply. It's just very important to understand what the halving is, what it means to Bitcoin as a whole. And so, Armando, break it down for the audience a little bit about the historic trends, what has happened post-halving in the past, and so everyone can understand and really know that we're not there yet historically of where we should be with Bitcoin pricing after the halving, because the halving just occurred in April, and we normally in the bull run really start to happen 4 to 6 months after the halving. So walk the listeners through it for a minute, and then we can jump in.
Now, this is the reason why I love Bitcoin and crypto in general, is because with Bitcoin, Satoshi created the halving in order to make sure that the value would always go up. That's the whole reason it was there, right? It's a supply and demand mechanism to make sure that there was always less supply coming into the market than there was for demand. So that's why I like it so much, because the laws of economics are built right in. And a lot of people hear about the halving, and I'm going to tell you, like about a day or two ago, somebody got mad at me in my comments. And they said that, I thought you said 2024 we were going to get rich. And I said, no, I said 2024 will be your last chance to get in. The peak is in 2025. That's what me and you both have always said. I looked at a clip from when we were on the stock market trading for, we both said 2025 was the peak. 24 was your last chance. People get these concepts confused, like the halving. So I was supposed to get rich at the halving. No, the halving was an event that would eventually make you a lot of money. Because people don't understand these concepts. I want to make them clear. But if you look back at the history of the halvings, like we said before, there was always a 4 to 6 month delay after the halving before we got into the bull run. And I remember in 2016, during that halving, there was almost a year before Bitcoin started to go back up. So it will happen. Eventually, we're going to see the bull run start to take place. But you have to be patient. You have to remember that April 24th, 2024 was the halving. 6 months later, 4 to 6 months later, puts us at next month or late October. So we're right on track. Bitcoin is past even where I thought it was going to be. You were right on your correction. I wasn't. I thought it would be lower. So we're in a good position. We're on the right path, and the things are happening on time.
Yeah, and it really comes down to, and my phone is actually flooded today as we film this, of people worrying about what to do in the stock market, AI markets, and crypto markets. It really frustrates me because I feel like people just don't learn. If it were that simple that you could all just get your money together, put it in, and a week later you're rich and you pull it out and then you go buy a beach house, everyone in the world would be rich and none of this would matter, and you wouldn't need to follow people like Armando and I to learn what to do in these crypto markets. It is not that simple. Historic action does not necessarily mean what the future is going to do in the markets. All we can do is look at leading indicators, look at the news of what's happening in the markets, who is entering the market, how much inflows are in the market versus outflows. All of that information is all we can do is analyze it, put it together, and figure out where we believe the markets are going to go next. But like we always say, when in doubt, zoom out. If you cannot find it in you to be patient and understand all of this takes time, you should take up underwater basket weaving or stamp collecting and just not be an investor. I'm being serious. put your money in a high yield savings and just forget about it and make 4% or 5% on your money, because this is not for the faint at heart, and people need to be able to learn and listen along the way and be patient.
And you got to be an active investor. You can't, like you said, if you don't want to be active, go to your 401k, go to high yield investments, high yield savings accounts and bonds and stuff like that, where you don't have to be as active.
Yep.
You're not going to make as much, but you don't have to be as active. So you got to make a decision. I'm going to be active. I'm going to stay on top of the news. I'm going to make a lot of more money. Or I'm going to be passive and let the banks, let the rich people manage my money, and they're going to make a lot less. So it's in there. You have to make your decision. So we talked about the M2 money supply.
Yep.
And so I want to explain what that is, right? So that's something that's happening right now that rarely happens in society, is that the M2 money supply is the amount of liquidity in cash, ready available cash that's in the economy, right? That means that a lot of people's net worth is locked up in mortgages, locked up in stocks, locked up in crypto. So the average person who's a billionaire has 95% of their money locked up. They don't have access to it. It's not like they have an account with $1 billion in there. People think that, right?
Yeah. I show people my bank accounts all the time. I'm like,
where's your money?
I'm like, here's what I keep in my regular bank accounts, because, you know, we always talk about that you have to have velocity on your money. And whenever someone brags to me that they've got $100,000 in their checking account, I just think they're a moron. Because why would you have your money, that much money, sitting in a checking account making 0.001% interest when you can have it even in a high yield savings account making 5%? So it doesn't make sense, but keep going.
Yeah, that M2 money supply is a measure of how much money is moved out of those investments and available in the economy. And right now, it's at a high that it hasn't been in a few years. And really, with Bitcoin and a lot of investment stocks, what we see is once that money is available, it starts to flow into investments 10 to 11 months later. And with Bitcoin specifically, we've saw a huge increase 10 months after this has happened. So given the significant growth of that M2 marker during these last 2 years, we can expect significant growth in Bitcoin and a lot of other investments, but we're looking at Bitcoin here.
Again, it gets back to looking at the macro understanding of the markets. Where is all the smart money going? Every single day, the news gets you to zig while the smart money is zagging. And I just don't understand why we have to continuously remind most people. And it just comes down to, and you can hear the frustration in my voice, that people just need to look long term. If investing were that easy, everyone would be rich, like we always say. And this M2 surge right now is very important to understand, and no one's really talking about it, is that when M2 increases rapidly, it often leads to inflation, which can also drive up the prices of Bitcoin and other cryptocurrency assets. There's a lot of great information happening, but there's also a lot of bad news right now that's happening in the markets. We have Kamala Harris. The Fed announced last week that it's time to cut rates. So then we're hopeful we see a 25 basis point rate cut. That should stimulate some of the economy. But then again, we don't know, because we also have to look at manipulation. Let's assume if Kamala is behind in the race September 18th, she could easily push for a 50 basis point rate cut or something else, which could then cause fear in the markets, because we don't know what all the level of manipulation is going to be in these markets in the coming months leading up to the election. So it is definitely an interesting time, and that's why we have to keep our eye on the prize.
There's so much uncertainty over our heads, man.
Yep.
And that's the reason why markets can't choose a direction. Uncertainty is bad for markets because people don't know where to put their investments. If people don't know, they just stand on the sidelines and hold on to their money and try to figure out where their certainty is going to happen at. So the election, like I always tell people, we're not going to see much until the election. So things are going to be volatile and crazy. But you just have to be patient, because once somebody, it doesn't matter who it is, somebody's elected, the market can choose a direction. That's crypto and stocks. And then we'll have more certainty and we can make bigger plays.
And something else before we get into the good news, and that is that September is historically a bad month for cryptocurrency. It just has been for years and years. But the bright side of that is October's historical performance is generally higher. So if you were to look at historical gains in October, the average gain is 22.9% for Bitcoin in October over history. And so the reasons for the October strength, in my opinion, they're attributed to various factors, but post-summer market activity, institutional buying, and the start of the final quarter for investors to be able to position position themselves for their year-end gains and what they're trying to either make up for or get rid of. So this is important to understand that October is generally a very strong month, and people just need to be able to weather the storm if we see one in September.
Yeah, so hopefully September is not as bad as it could be, and October is a lot better than it should be. And that'll put us at a good position going into the post-election. I still say Bitcoin's going to near 100,000, near or close to 100,000 by the end of the year. I still stand on that. And I believe we can get there. There's still a lot of positive sentiment about Bitcoin in the greater cryptocurrency market. And I believe this is going to, with all these other things we talked about, the post-halving rally, the M2 money supply, the October increase that normally happens, and just all this positive sentiment around Bitcoin, I still think we can get to 100,000 by the end of the year. And that's going to happen mostly after the election, but I still think we can get there.
We do this podcast every week, and it's always interesting when we prepare for the podcast, and we have to siphon through hundreds and hundreds of news stories trying to figure out where the best information is to share with our audience. And I think it's very important for everyone to understand that every week is not going to be just rainbows and unicorns and filled with great news. Some weeks there's just bad news in the markets, or there's war and there's geopolitical tension or whatever is happening, especially leading up to the election. So that's why we have to be able to, when in doubt, zoom out, because you have to be able to look at the overall picture of where the crypto markets are going. If you think about Japan, what's happening there, you're looking at all of these other countries that are adopting cryptocurrency now and making it legal. So it's never ending good news, but people tend to dwell on the bad news. So that's why I enjoy what we do each and every week here at the Crypto Trends Podcast, is try to spell out the picture of where the markets are going, what we believe is going to happen in the crypto markets, and how you should respond to them, because it's not always easy. So let's get on to a piece of bad news that I think we should touch, because I don't look at it as bad news, and we're going to touch on why. And one of the key factors that I think is a crazy stat that we'll get to in this point, and that is crypto saw more than $300 million in outflows last week. So why and what does this mean? After seeing the largest multi-week inflows in recent months, cryptocurrency investment products are back to seeing major outflows amid strong economic reports in the United States. What are you seeing, and what are your thoughts as to why?
It just seems like the market is not buying the hype of the economy being good. So people are moving money out, right? It's a lot of money. It actually was 318 million, which is a lot of money over such a short period of time. So it just shows that the confidence is not where it should be. So CoinShares actually put this report out, 318 million, and it's not just a blip, right? It's been happening over an extended period of time. But one of the things that I think is happening too, and this is all speculation, and we've talked about this, is that there's been several reports, one by Forbes, one by, I think, Business Insider, that a lot of people, especially Generation Zers, are pulling money out of investments, including crypto. That's the number one that Gen Zs have, is crypto, and going into sports betting. And what we see now, we're going into the football season. A lot of people are putting ridiculous, clearing out 401ks, taking out second mortgages. Sports betting is becoming almost a crisis in this country. And I think a lot of that outflow, and if you just ask me, and there's no evidence, I'm just speculating, a lot of that outflow is due to sports betting. I think people are moving money out. They saw crypto as a bet anyway because they weren't properly educated. It's bet to another bet. And now that's part of the outflow.
Yeah, I think this is a really important topic that people just aren't talking about. And here's what I think. I believe that because we are so conditioned now in this comparison-based lifestyle that we live by watching stuff on Instagram and TikTok and Reddit and everywhere we see information, is that people, especially with the Gen Zers, they just seem to be so conditioned to thinking that they should be able to YOLO their money and get rich because they hear of these meme coin stories and crypto's going to the moon and all that. And they're so conditioned to that when it doesn't happen, like recent months where the crypto prices are just not accelerating, we're not in a bull run yet, that they just get frustrated. And I think that's why they just pull the money out and they go start sports betting. They found one guy, just like the one guy that turned $1,000 in a meme coin into 100,000. They found one sports bettor that did the same, and they think, I can do that. I know as much as sports as Billy does. This is a problem. I think it is rampant because so many people just feel that sports betting is that YOLO endorphin-filled high. That's not investing. That is gambling 100%. I don't care how much you study. You are gambling with your money, and I think that is the biggest problem. I read a story similar to what you alluded to last week that over 40% of U.S. men 18 to 50 are sports betting more than investing, and this is definitely alarming news considering credit scores are at all-time lows and credit card debt is at all-time highs. So this is so important. And also another factor that I think comes into play right now is that the Fed at Jackson Hole last week announced that they were finally going to be ready to cut rates. So we assume that on September 18th, we will see a 25 to 50 basis point rate cut. And with that announcement, we might see some solid stimulus in the markets, but this could also mean some of the funds leaving crypto at this time will be displaced into sports betting, into traditional markets, or into other sectors, and that might also be what's going on.
Yeah, with sports betting, I want to go back and touch on a point. I think that what happens, especially with a lot of younger people, is that they never really learned financial literacy. They never really learned how stocks and crypto work. They just got into it because their friend or their cousin told them, or their uncle or whatever, and they got into it. In their mind, it was a bet. It was a gamble, because if you don't know what you're doing, it's a gamble.
Right.
It didn't work out, so what do I know about? Oh, I know about football. I really know a lot about football, and I'm 90% of the time I pick the right winner. So I'm going to start betting on football. Then it's easy to win at first. The problem is that eventually you lose everything.
Yeah. Because
eventually it's an upset or some kind of fluke, and that's when they get all their money. So eventually you will lose. And other people probably listening saying that's the same thing with stocks. No, it's not, because with a stock, we can tell you NVIDIA is going to this price. Everybody gets NVIDIA today. Every single person that would be listening to this would make money the next day, all 100%. With sports betting, a certain percentage has to lose in order for the book to continue to go. So everybody can't win. And every time there's at least 30, 40% losers in every single sports bet. So it's not as easy as it looks on the surface.
Yeah, I can always go back to a story 20 years ago where I lost one of my best friends over this exact topic. He was pissed at the world because he wasn't making a bunch of money. He was heavy into fantasy sports and sports betting. And we got in an actual altercation, one of my best friends, because I was making so much money in the stock market. I was crushing it with my investments, and he was pissed. And I said to him, I said, look, the difference between me and you spend 50 hours a week studying athletes, studying sports, every stat of every baseball player, basketball player, and football player, so you can make these sports bets. But you don't know what's happening at home with their family life. You don't know if they're sick that day and all of that. I don't leave my money to chance. And so we had this altercation about it. I said, look, if you spend as much time studying sports and watching sports on studying finance and financial literacy in the stock market like I do, you'd be able to do what I do. But unfortunately, people choose their hard, and they choose what they spend their time on. And I think this is a very critical point for so many people, especially now because sports betting is so glamorized. You think of all these sites and Barstool Sports and all these different places where people are glamorizing sports betting, all for gambling. I like to gamble, but I gamble with money I can afford to lose that is meaningless to me if I lose it. I don't gamble with money that should be put into investment and paying my bills. So that's a big difference.
Your rent, right? You don't gamble with your rent money.
No. All right, so on to our next point, and I thought this one was definitely worth touching on because Coinbase is the biggest platform out there, but Coinbase used AI to make its first crypto transaction this week. And I think this is a really cool point because Brian Armstrong posted about it, how one AI was able to buy from another by buying tokens, not crypto tokens, but AI tokens. And this is from a large language model to another. And so they use these tokens to be able to buy services and other things within these large LLMs like OpenAI and ChatGPT. And so this was pretty crazy news. I thought we were a long ways off from this, but I think this news is important for everyone following the AI narrative, following the crypto narrative, and understanding where it's going and at what speed, because so many people complain that AI is not something that is worth it yet. We're still a ways off because it doesn't do enough yet for the average employee or the average company. And every single week we see some new narrative in AI that gets us closer to where it's really going to be efficient for the everyday person to use. So I thought we should touch on this subject.
Yeah, I want to touch on what you just said first, because we have to understand is that as we become familiar with technology, we start to discredit it as not being that transformative. And I'll tell you why. 1956, the discipline of AI was started, right? They started doing research and development, trying to create AI smart systems and a lot of expert systems and stuff like that. So when we moved on into society, for 40 years, they said, if we can ever get a computer to beat a grandmaster at chess, that's the point when computers have reached the human level intelligence. And for 40 years, it was hard for 30, 40 years. In the mid-90s, it happened. And guess what happened? Oh, that's not really intelligence. And they moved the goalpost back. Then, as we kept getting better and better, keep moving the goalpost back. It's because of familiarity. You become familiar with ChatGPT. Oh, it's not that much. When it came out, everybody went nuts. But once we got used to it, it's not. That's what's happening right now in business. But remember, we were on the stock market trading floor. We talked about how AI would be a narrative in 24, 25, and I think it's starting to happen. I think that AI and blockchain are a perfect marriage. I think that blockchain really, if you think about it, other than Bitcoin, hasn't found a real use case in society. It has utility. It has potential, but nobody's really using any blockchain on a major scale. It's mostly speculation. But I think that AI is going to step in and figure out, like with these machine-to-machine transactions, and make cryptocurrency a currency for AI systems between each other. And there was a report that came out that said that it's a big company out there that's creating a hive mind that's going to run an entire company from the CEO down to the workers. And it was going to be different AI systems built into that and would all work on one supercomputer. Now, how are they going to pay each other and move money around? It's going to be with blockchain. And that's the future of blockchain. And I believe strongly that's the use case going forward. And when we add in quantum computing, that's going to make computers 1 billion times faster than they are today. That's going to create the super AI, the AI that's past human intelligence. And they're going to need blockchain, an easily accessible, safe currency to pass between each other. It's fast, that goes around third parties, and is easy to send small amounts without having ridiculous fees. That's the future of blockchain. And I think this is a huge move, and this is the first step towards that future.
And one of the kind of interesting forays we can discuss here is so many people say that AI is going to take their job. And I think one of the most important things for people to understand, AI is not necessarily going to take your job anytime soon, but the person that knows how to integrate and use AI better than you is going to take your job. And that's one of the things that I talk about a lot in my message, is to make sure you're always upgrading your skill sets. Because like you said earlier, when people fear something, then they talk bad about it. I remember a decade ago, everyone told me I was nuts for buying Bitcoin. It's never going to amount to anything. It's just for black market and drug dealing and all that kind of stuff. And they were just wrong. But because they didn't understand it, they always badmouth what they don't know. So I think it's important for everyone to understand nobody really knows exactly what dystopian future we're going to have with AI and blockchain and cryptocurrency. My guess is we'll have universal basic income for everyone, and it'll be at different levels. And all of this AI functionality will be taking many of the menial jobs away from the workforce. And then people will have their universal basic income, and the world will be a much more efficient place. And then people will have to choose, what is their why? Do they want to get in really good shape? Do they want to become a world traveler? Do they want to spend more time with their family? What are they going to do if their job is replaced and they do get this universal basic income? And that may sound crazy, but that is one of the beliefs I think will happen in the future, because of the fact that AI is going to be here to stay, and the disruption of AI and blockchain is going to continue to create more and more efficiencies for people that are building companies or want to build companies, but also make it easier for someone just starting out. That's the one thing people always get wrong. All of these great technologies make you more efficient. Even for me, we use AI every single day in one way or another, and it really helps us along the way because of the fact that we can continue to be more efficient, add more tasks with less employees. There's some stats out there that to form a $1 billion company, it used to take 300 employees, but now you can do it with 8. And I believe that's going to continue to get better and better because AI can do so many things faster and better than a human can. And I think all of those efficiencies are going to be a big win for the future.
My grandfather spent most of his life behind a plow horse, plowing fields in Tennessee. His grandson is sitting next to the great Robert Croak doing a podcast. So think about it. Is it sad that he lost his job to compute whatever technology? No, it's not sad. We just moved on to something that we enjoy doing a lot better. So that's what we're talking about here, and that's what Robert touched on, is that your job, your menial parts of your job are going to be removed, but you can still go forward and do all the things that you wanted to do. That's the future of AI that people don't know. They're afraid of what they see, not understanding the great potential that lies ahead.
And that's why when you look at the job force right now, and everyone is diving into programming and computer sciences and all that, meanwhile, the blue-collar jobs, the electricians and the plumbers and the drywallers are the ones making all the money right now because of the fact that a lot of those positions, equipment and machinery can help, but it can't eliminate. And that's why you just have to stay ahead of the curve, because you don't want to be the bug, you want to be the windshield, you want to be going down the road fast, and just so important for everyone to understand. So let's get on to our last point right now, and that is Ripple just announced they're adding smart contracts to the XRP ledger. And what does this mean for XRP? I think adding the smart contracts is going to help them even more with their developer ecosystem. And I think this will also help with further developments for cross-border payments and systems. We spoke a few weeks ago how Ripple and XRP has been sequestered for so long because of the court case and the settlement, and they couldn't get top talent. And now that's all over with, and we see more and more top talent entering the market and excited about XRP. Adding these smart contracts is really just going to add to the development cycle around XRP and XRPL. So I think it's really important if we touch on that today and go through and walk through what does the smart contract mean and what is the upside in XRP with this announcement.
Yeah, so for those who don't know, smart contracts are digital self-executing contracts that are, or code that's built on the blockchain, right? And Ethereum has it, Cardano has it, Solana, a lot of other blockchains, but Ethereum's number one. So when a certain condition is met, certain things happen in that contract. And the most common thing is money is released somewhere or sent to another wallet, right? So money comes in, a condition is met, money goes out. That's most smart contracts. There's other ways you can do it, but that's most. So think about a situation in life, right? Is that if I buy airplane insurance, right, and I go to the airport and my flight is canceled, I don't get the money in my account immediately, right? I have to go get some paperwork somewhere, send it to the insurance company. They have to check it. I have to fill out a form, and if I'm lucky, I'll get the money back for the flight, right, if I took out insurance. But with a smart contract system, the smart contract system would attach to the airline system, and the money would be sitting in an account, the insurance company's money. You'd pay into that smart contract, and then if the flight was canceled, the smart contract would automatically execute, and you'd have the money right into your wallet or account. It would happen automatically. No need for a middleman, no need to any paperwork, forms, anything like that. And that's the power of smart contracts. And it can be applied to mortgages, titles, all of these things, real world assets in the world that have these conditions or have this problem with trust.
And this is a huge point. I'm so glad you brought this up. I believe and one of the biggest problems we have as we adopt into blockchain is so many of these large companies like insurance companies and airlines, they make it difficult for us to get what's coming to us for a reason. Because I look at it as opportunity cost. When an airline owes me $250 for a refund and I have to chase it for 5 different phone calls and 3 emails, I just let it go, and the airlines know that with most people. So once we do get this adoption in insurance, airlines, and other sectors of the economy where automation is put in play through these blockchains, it's going to make it so much better for the consumer because these are more efficiencies that are going to help us along the way. I have 3 or 4 different refunds right now from airlines I'll never see because it's not worth my time to chase it, and they know that, and that's why they make it difficult. It's the same thing with utility companies. It's the same way with other companies that make contracts and refunds refunds and understanding billing difficult, the medical industry. All of that's going to be disrupted in our favor because no longer will these companies and these industries be able to make billions and billions of dollars off of mistakes that they've made because we don't know about the mistake and don't know how to get the refund. So I'm super excited about this portion of what blockchain is going to do by creating these contracts and then also the trust, because then that way, like you said, there's all these new rules and laws that are being passed right now in the airlines. And as soon as they are passed, when our refunds are automatic and go right back onto the credit card and we don't have to make 15 calls to try and get our money, it's going to be a game changer for all of us.
And this positions XRP to be one of the biggest blockchains in the world that allows smart contracts. Trust is a big part of our society. Lawyers, we have contracts, we have agreements. All this because we don't trust each other. So if something happens, what's going to happen with the money? But smart contracts solve that issue. XRP is now one of the biggest blockchains in the world that allows smart contracts. So it's huge news for XRP in the future.
You made a bold prediction on XRP pricing the other day. Walk us through it live here in the podcast studio.
I said it's highly unlikely that XRP would ever get to $10,000. But yeah, it's speculation, right? I was just explaining how XRP could possibly get to $10,000. I don't believe it's going there. I say 25. But I said if the entire world uses, XRP for payments and the SWIFT payment handles this and XRP was used in that and the demand could push up XRP to 10,000 in 10 or 15 years. I said it was highly unlikely, but there was a path for XRP to get to 10,000 per.
I love it. So just so you guys understand the importance of XRP, we currently in the United States operate on what's called the SWIFT payment system. All your credit cards, all your bank wires, all your transactions go through SWIFT. As we migrate away from SWIFT to the blockchain, it is called the ISO 22 payment system, whereas XRP and XLM are two of the big leaders in the ISO 22 system. And that is why I am a big believer in XRP for the future. With that assumption, as this migration keeps occurring and more banks and countries integrate XRP into their system financially, this really changes the game in cross-border payments and how to do business globally and makes it a lot more efficient and cost-effective. Give us end of 2025. Let's give everybody a short-term view. Where do you think XRP will be? Because I'd be happy at $10, but I think you see it being much higher than that even at the end of 2025.
So we got Bitcoin at what, 58, 59 this morning. So realistically, if XRP was carried up with Bitcoin like all the other top coins, XRP would be at what? It was 384 at its height, so it would be around $6, $7. Let's say Bitcoin goes from here this day to 250. That's a 4 or 5 time increase.
Okay.
So that puts us at 5 times 6 is 30.
Okay.
But let's say that XRP didn't keep up with Bitcoin, because I don't think it will in that, not 1-to-1 ratio. But let's say XRPL takes effect, right? Let's say even Japan put out some news the other day and said that they were planning to start to push their banks to use XRP. This is news that's happening all around us. If this news starts to hit, if the Bitcoin bull run and the crypto bull run starts to take effect, we could get to 25 to 50. That's what I'm saying. We could get that. That's reasonable to say. 10 is more conservative, and I think that's 80, 90% chance of getting to 10. 25 maybe 70, and 50 will be like 40, 50, maybe even 30%. If everything lines up perfectly, maybe. But remember, the whole market cap would have to go up. Bitcoin would have to be significantly higher than it is. The entire market cap of crypto would have to go up 5 or 6 times for this to happen. And if all of those things happen, we could get to 50. But I'm saying 2025 just to be in the middle of those two predictions.
I love it. I want to thank each and every one of you for listening and following along. You can find us on Instagram at Crypto Trends Podcast and on Spotify, Apple, and YouTube. And we appreciate it each and every week. For those of you that find value and love the podcast, share it with a friend, give us that 5-star review, and let people know about the Crypto Trends Podcast, because we're here every week to bring value to you, help guide you through the troublesome markets, and we'll see you next week.